Welcome to Policy Bazaar. I'm Arjun Bhagat, and today we are going to take the conversation forward on tax planning. As you're aware, it's only a few weeks for the end of the financial year. During our previous discussion, we talked about the importance of tax planning and how we can save taxes by choosing the right investment plans. We also learned about various tools of investment that we could choose from depending on our needs and long-term investment goals. Now, this includes the likes of insurance, ULIPs, PPFs, etc. Now, in this episode, we are going to focus on how you can avoid opting for the wrong insurance plans during our tax planning, if you plan carefully, that is. Now, joining us in the studio is Naveen Kukreja, Group Chief Marketing Officer of PolicyBazaar and Director of PolicyBazaar. Welcome to the show, Naveen. We are talking about insurance. We want to focus on that in this episode. Why is it so important? And why should one have that as a major component of our financial plans?
Thanks, Arjun. So we all try and plan for life for a long term, but we all know that life is uncertain. And insurance essentially is a product which tries to cover uncertain situations and tries to cover financially for the uncertain situations which you can't plan as an individual. That's why, in my mind, insurance is one of the most important investment products that you have, which you must have in your portfolio. There are various kinds of insurance which we will talk about. Of course, starting from the term insurance, which covers your life, something that covers your health, something that covers your future planning from a retirement and child perspective. But essentially, insurance is a product is usually misunderstood by Indian consumers because of lack of awareness. But it's also one of the most important products just because of the fact that it can protect in scenarios which you normally cannot, or a normal individual cannot plan for.
Right. So, talking about insurance products, one plan which I feel personally is very important is term plan. Now, that's pure life insurance. It's not a tax-saving instrument, but it is important. But it really hasn't gained that much of popularity in India. Explain to us what term insurance is and why it is important. And also, some of the broad costs attached with it.
Arjun, absolutely. Like you said, it's one of the two most important insurance plans that I recommend to the consumers and users. And if there's the first plan that you should take, a term plan. Essentially, I look at my scenario. I have a wife and a 3-year-old kid. We have a certain expenditure as a family. I have certain plans for my kid for his future and his education, which is all good. I know I'm earning for that and I'm saving for that. What happens if I'm not there 2 years later? Life is uncertain. Something can happen to you, something can happen to me. And that's where term insurance comes into picture. So if, for example, God forbid, if I was not there 2 years later, I would not want my family to suffer or change their lifestyle. I would not like to see my child's education or future planning get hampered just because I'm not there. So buying a term plan tries to protect that risk, essentially. A typical rule of thumb that I have for the amount of cover you should take is roughly 15 times your current salary. Let's say
an annual, on an
annualized basis. Let's say your annual salary is 6 lakhs, which means about 50,000 per month. My suggestion is that you should take a cover of typically 1 crore. Essentially, again, the reason for that is that if you take 1 crore and if something were to happen to you, God forbid, your family gets that 1 crore completely tax-free, and if they were to deposit that in bank, the interest for that would be roughly equal to 6 lakhs, which is your income. So essentially, the family can continue their standard of living by the interest income from that sum assured. So that's a ballpark rule of thumb.
So you talked about 1 crore. What would the typical premium be for 1 crore, and how does it work? I mean, the younger you get it, the more you stand to gain.
Yeah, absolutely. Like you said, the earlier you take it, the better it is. But typically, consumers do take it when they kind of have the need, when they get married, and that's when they start to see the dependency for their family. So for a typical 30-year-old, a 1 crore cover would cost as little as 8,000 rupees per annum. That cost has come down drastically in the last 3 to 5 years with the advent of online insurance plans, where the insurers have cut down on the distribution and operation cost and then passed on the benefit to the consumers. So term plans actually work very well for consumers today. You take a 1 crore cover for as low as 8,000 bucks. If you are 30 years old, if you're 35, it'll be about 10, 11,000.
And that's a fixed amount that you end up paying for the term that you have taken that for. So if you take it till 60 or 70,
yes,
it's not going to increase like, health insurance increases. People are always worried about that.
Yeah, absolutely right. The term insurance is a long-term cover, and you fix your premium when you're taking it. So if you take a term insurance cover at 30, you will still pay the same premium 20 years later for the same sum assured. So the earlier you can take it, the better it is. And if you have dependents, the other way to think about it is, if you have dependents who would be at a disadvantage or whose lifestyle is at a risk of changing if something were to happen to you, term cover is a must in your portfolio.
Let's move towards medical insurance. You would obviously consider that a major component in the entire insurance portfolio that one has as a family, as an individual. Walk us through that. What are the kind of plans that one can opt for, and why is it important?
Yeah. Like I said, Arjun, there were two plans that one must have from an insurance perspective. One was a term insurance, the other is the health or a critical illness insurance, and if you can combine that, it's the best product. So health insurance, essentially, again, life cover is a once in a lifetime kind of an eventuality. But health insurance is something that you can need over and over again. You can need multiple times, and every time something happens to you or your family, if you have to pay from your pocket, it kind of hits your budget, it hits your planning, it can alter your planning in a fashion that kind of impacts your retirement or your child's education. So it's better to have a insurance plan in the form of a health insurance or a critical illness cover, which can protect against that eventuality. If you have to go for some expensive health treatment, and the health treatment is getting very expensive these days, you can go for the best from India, from abroad, and it can get very expensive. You can cover that through a health insurance plan. There are basically 3 or 4 kinds of health insurance plans. One is a normal health insurance plan, which protects you if you fall sick and you are admitted to hospital for any reason. These covers usually are cashless and hence very convenient these days. If you have a cashless cover, you just get admitted and you kind of inform your insurer as well as hospital. If the hospital is part of network, they will directly settle the bill with the insurer. You don't pay anything. So from that perspective, it's very convenient for consumers. So that's one type of, and one of the most popular types of health insurance. The other is a critical illness cover, which protects against certain specific critical illnesses. So
now this is often offered by the company as a rider.
That's right.
So explain to us, what riders are, and what are the benefits of, say, taking a critical illness, and are they different for men and women?
So the critical illness products are usually available as a rider, but they are also available as standalone products by certain companies, either life or health.
Okay, so they are available separately.
They are available separately also. So one such product is available through Aviva. I think another such product is available through Bharti AXA. The only difference between a rider and a full product is that you can go for a rider product only with the main product. So you have to have the main health product and then you can take a rider, and the rider is always attached to the main product. You need to continue the main product to have the rider also. Whereas if you take it as a separate product, you can continue to you can decide to continue the critical illness cover but change your health insurance later, increase it, reduce it depending on the need, without touching the critical illness product. So if you have it available as a separate product, you always have more flexibility, but even if you have it as a rider, it's equally good. It usually covers certain specific types of illnesses, so that's something that consumers should read out and get themselves aware with in terms of what diseases does it cover. But typically the kind of diseases it covers are the ones which are rarer in nature, but if they were to happen to somebody, they will have a much bigger financial impact rather than generally falling ill, and hence they are important. So suppose you have a heart attack or you have cancer. All of these are treatable now, but they are very expensive from a treatment perspective, and if one were to pay himself or herself for that can impact all the future planning. And hence, if you have a critical illness rider or a separate cover for a appropriate sum, that can take care of your illness for a elongated period.
So, as far as critical illness goes, medical health insurance goes, the ones that we are familiar with, they are both, of course, tax deductible. Yeah. How expensive is critical illness cover, both as a rider and, I mean, just a ballpark figure for our viewers to get an idea of how it works? So, because the concern is always, yeah, am I overpaying? Maybe it is actually a small cost to, cover your life, but still.
Yeah. So, from a cost of protection perspective, they are not very expensive, like you said. So, typically a critical illness cover for about 5 lakhs would be available to you for as low as 3,500 to 4,000, depending on the insurer that you go with. If you want to go for a higher sum assured, which people do want to when they decide to take the critical illness cover, a 10 lakh cover would be available to you for 6,000–7,000. Few people tell me that they don't go for a separate health insurance, is that they have a health insurance cover from their companies.
Right.
Typically, the question that comes is that they have some health insurance, they don't know how much it is, and they're not sure whether it's adequate or not. So my suggestion to that, and if you're in that category, my suggestion to you as a consumer would be that there is something called super top-up or top-up plans available. That's an excellent way of topping up your health insurance, especially if you have an existing cover from your company, at a very, very economical cost. Or even if you have a...
Super top-up is the term.
All right. Yeah. So it essentially tops up your original health cover. So if you already... It's targeted for people who already have one health cover and they want to kind of have an additional cover.
So it pretty much reinforces the insurance that you have for you and your family. Yeah, increases the limits and...
increases the limits at a very economical cost. So if you, for example, if you pay 10,000 rupees premium for a 5 lakh cover, you can top it up to as high as 20 lakhs by paying an additional 5,000 rupees only.
So that's a good tip, because a lot of the insurance companies don't really overtly tell you that you can get this benefit. I wonder why, but right.
From a company's perspective, if you buy the full health cover, you pay more, and hence the companies do. And given the health insurance penetration, I think the companies are focusing more on people to have the first insurance cover. But there are a lot of people who have the first health insurance cover and they still want to enhance just because of the rising cost of medical. And top up or super top up is an excellent way of topping up your coverage without paying a bomb for that.
Right. Let's move to child plans. Another critical area, especially for young parents. Cost of education is going up every year. I'm quite surprised to learn how expensive it's become. Even in India, I mean, America and other places is of course a different story. How should a young couple or a middle-aged one go about planning for their children? Yeah. And what are the options available and also try to get that insurance benefit, the tax benefit that insurance covers have.
Sure. Arjun, like you said, child education planning is one of the important parts of anybody who has a child, and somebody who has a child kind of thinks of either child planning or retirement as the two options. We'll talk about retirement later. One of the examples that I quote very often is when I did my MBA about 14 years back, and the cost of doing the MBA from the same college is now about 15 times in 15 years, which means the cost has doubled
100% a year.
Roughly every 3 to 4 years the cost doubles, which means the cost is increasing at about 20% a year.
Right.
That's how the education cost is increasing from good institutes in the last, or has increased in the last 15 years. So it's very, very important from a future planning perspective to start planning for your child's education now, because you don't know how fast the cost of education will rise. From a planning perspective, there are various options to the individuals, and there are different approaches that individuals take.
Let's continue this discussion, Naveen, because it is important, especially for young parents, middle-aged parents who are planning for their kids. We'll continue this, but we have to take a short break right now. But you can tweet us at Twitter at PolicyBazaar_in, and we'll see you shortly after this break. We're going to continue this discussion, and we are also going to be taking some of your questions. Keep watching.